Hello and welcome back. Hope you are good, doing well. So hopefully sound is there on your end and you can see my screen. All right, so thank you very much for being with me. Hope you are good, doing well, and enjoying your weekend and definitely getting ready for next week. So if anyone want to join us looking for group membership, looking for setups, or looking to join us, just simply go to wave-trader.com and there are membership levels. You can check those levels and you can join from there. And if you are looking for further information, just simply fill that form and send that form to me for further information. I'll try my best to get back to you as soon as possible. All right, so the first thing is that we are having, high tension in the world right now. We were having, Ukraine crisis, and those crises looks like is going to be is trying to turn into nuclear crisis right now. Okay, so all these things are not good for the world right now, as you guys know that, and definitely very bad sign for the financial markets. All right, so market doesn't like that kind of scenario at all. Market wants peace and want to grow in that kind of environment. Okay, so right now threat is just increasing after every running hours, all right, to the markets. So market is market is already feeling pressure of these crises. Okay, as you guys know that we are having Ukraine and Russia fight is going on. Okay, and top of that, oil or natural gas crises are building. Yeah, so there is pressure building on the EU to, kicked out Russia from SWIFT, all right, and also, stop buying gas and oil from Russia. So which is going to be simply a disaster for the financial market, for the oil, for the risk on assets. Okay, this is a very bad scenario for the risk on assets. Okay, and the safe havens, they simply gonna fly on that. Right now, news is just floating over there that EU is gonna remove Russia from SWIFT. All right, so it hasn't confirmed yet. Still, no news is floating over there. All right, and the news to stop buying natural gas and oil from Russia also, or limiting that. Okay, both news are not good for the market. Okay, why these are not good for the market? Because inflation is already at a higher level. Okay, inflation is in the US at 7.50. All right, so and we are having average, inflation is about 5 or 5.5 across the developed countries. All right, so if they're gonna stop buying oil from Russia is a major supplier for them, so that inflation gonna spike up very, very aggressively for more upside. Okay, so we can say that we may see stagflation. All right, and last two times, the recessions which we have seen last two times, those were because of the higher oil prices. All right, or 1970. Okay, 1970 was a perfect example for stagflation, we can say that. Okay, when Middle East countries or OPEC countries stop supplying oil to the developed countries. All right, or if you guys are familiar with the oil embargo terms. All right, so oil embargo, all right, and that was causing the inflation to go higher, and the rest of the market was going down at that time. All right, risk on assets, stock market was going down, equities were going down, so safe havens were flying at that time. So it's building a similar kind of situation right now, okay, like 1970. All right, so at that time we were having oil embargo. All right, Middle East was was the major supplier of oil to the developed countries, Europe, USA. All right, right now Russia is the major supplier to the Europe. All right, so right now Russia is saying that they're not gonna they're not gonna use energy as a weapon. All right, right now they are saying, but Europe is just keep putting more sanctions on Russia. So at some point Russia may use energy as a weapon. Okay, they can stop, they can just turn off their tap from that side, and they're going to be shortage in the Europe for the energy. All right, so if they're not going to turn off that tap, then Europe may remove Russia from SWIFT. Okay, so removing from SWIFT means that it's going to be difficult for the EU countries to make payments to the Russian banks. All right, there are a couple of ways which they can use, but there definitely going to be pressure on the Russian the European markets. All right, the European energy market. So it's a time bomb which is just building over there. Which way it's gonna settle, not sure. Right now market is telling that after couple of weeks we're gonna see stability. Okay, everything gonna calm down, but right now we're gonna have we have to go through a very difficult time. Okay, we are the whole world is going through a very difficult time, specifically since Russian President Putin said that his nuclear response force to stay alert. All right, so tension is just simply rising after that. There is tension everywhere around the world, in the US, in the Europe, in the China, or other in other Asian countries as well. So let's move on. That's the background. When you are going to trade about that, make sure you keep that thing in mind, what's happening in the world. All right, and that's definitely going to impact the market. So last Friday market was expecting that there are not going to be hard sanction on the Russia from the USA, from the EU side. All right, and oil went lower, risk on assets aggressively went higher. People started to buy stocks. All right, stock went higher, equities went higher, oil dropped significantly, or risk on assets went higher, and safe havens went lower. Okay, but the developments which we have seen over the weekend, yesterday and today, are very sharp. Okay, very aggressive. They can change the sentiment in the market tomorrow and for the next week. Okay, and after after a couple of weeks, there are going to be Fed rate decision as well. Okay, so inflation is already at a higher level. All right, and there may be a shock because of the energy, because of the less supply of the energy to the Europe. Okay, which can create a stagflation shock. All right, so that means Fed has to raise rates, okay, to bring the inflation down. So if they're not going to raise the interest rates in coming meetings, all right, they're going to hold on more. Okay, so inflation not going to come down. Inflation going to keep pushing more higher. So we may see double shock to the inflation. Okay, one is the cost push shock to the inflation, all right, because of the higher energy cost, and the other one gonna be from the central bank, okay, because of the ultra loose monetary policy. So there going to be pressure on the inflation, and there going to be pressure on the central banks as well, if they're going to keep ultra loose monetary policy much longer period of time. Okay, now let's move on to the setups for the next week. All right, so dollar index still to continue to keep pushing more higher. in the last weekly market outlook, in the previous weekly market outlook, as you guys know, that we were expecting it to continue its trend, okay, and hold the daily trend. Okay, so we are still within that trend. If I'm going to look at the daily chart, I'm going to pull out my moving averages. All right, so what we were expecting in the last weekly market outlook, we were expecting this to hold those moving averages in the last weekly market outlook. All right, we were expecting it to hold those moving averages and continue this next bullish leg for more upside. Okay, so that bullish leg almost completed back at that top. Okay, so potentially still there for the dollar to continue to keep pushing more higher. So for the next week, we are expecting market to open with a gap. All right, and if that gap comes out, then we still may see more upside on the dollar. All right, so dollar can get stronger after that gap. All right, because the tension which we are having right now in the world. All right, so what you are looking you are simply looking for this sharp correction. Okay, this sharp correction happened, yeah, so when everything was worse in the world, okay, before Friday, when market knew that things are getting worse, Russia is going to invade into the Ukraine. Okay, so everything, dollar just simply spiked up aggressively for upside, went higher. And on Friday, when we have seen reaction from the West, reaction was soft. Okay, then people realize that things gonna settle down. Okay, we're not gonna have hard sanction from the West. Okay, then people started to sell the dollar and it went lower. So what happened over the weekend? Okay, over the weekend, West is slightly tightening is twisting, okay, or bringing more hard sanction on the Russia. Okay, so we may see another breakout like that. Okay, and that breakout can continue to keep pushing more higher. Okay, and we may see breakup. So your target should be the 27 of this next leg. All right, so breakout. So breakout of this current move which we are having over there. So I'm anticipating price market to give us a gap. All right, so this to break out sharply, correct, and continue to keep pushing more higher. So if it doesn't break out, all right, which is very less likely, let's say it's not going to give you a gap, then slightly push more lower, hold the trend, okay, and again then continue its bullish trend for more upside. If understand these that lower time frame, then great. If not, okay, then price can fall back to those moving averages again, that trend. I'm not anticipating this to fall that much lower again, which is very, very less likely. All right, but in case if that happens, then the trend still going to be bullish. Okay, as you know that fundamentals are very, very strong for the dollar strength. Okay, like that. So hope like this. Okay, like this previous one. So price held that trend and went higher. So again, if it comes back within that trending moving averages, okay, so still gonna be a bullish story. Hope that makes sense. All right, so now let's move on to the euro dollar. So euro dollar is simply opposite to that. So in the last weekly market outlook, we were expecting it to go to the downside. All right, so this to hold and continue to keep dragging more lower. All right, so our moving averages to hold. Hope you guys remember that. Okay, if you don't remember that, then there is a chart on the Telegram. You can see that I have posted that chart on the Telegram, so you can go through that and watch that. Okay, so it has completed that formation, the formation which we were expecting over the expanding triangle formation from this previous low, when ECB said that they're going to raise the interest rate, they're going to wind up their QE program. It spiked up very, very aggressively for upside, okay, and then completed the formation over there. And then again, we got Ukraine crisis, which is right now turning into nuclear crisis, all right? So price is heading for the downside. So the target is the 110. If you got the trade from that previous top under the moving averages, great, all right? So you are looking at to just keep, I'm anticipating it to go lower than 110 this time, okay? So price is already broke out. So as you guys know that the longer term target going to be this previous low, okay, which is at 108. So right now you are looking at to tag first 110. Okay, so what is the lower time frame analysis? The lower time frame analysis is just simply the correction which we are having over there. All right, so I'm not anticipating this correction to go all the way back to that previous top. There is no chance right now, okay, because of the fundamentals are really bad for the risk on currencies right now. Okay, so safe havens, they're really good. So what you are simply looking for breakout, okay, price to stay below that. That's far away. Okay, so 113.50 or 60 is far away. So the 1 hour time frame correction which we are having over there, that to break down aggressively, okay, price to correct, and this is going to be the trade first. Okay, so that's going to be the trade. This leg you are looking for the next week. All right, so this leg, and once price gonna tag this low, all right, so you're looking this to break down this previous low and continue to keep dragging lower all the way back to the 110 or go back up for another leg. All right, this formation is likely. Okay, flat formation is likely. So when you are, when price gonna reach to this low, make sure you're watching for that flat formation. All right, so if I'm gonna remove that, so breakout and price to continue to keep dragging lower all the way up to 110. All right, so Australian dollar. All right, so let's just bring a previous week, weekly market outlook analysis. Okay, I'm gonna bring that quickly and then gonna talk about this, what to look for on it. All right. Hi guys, Greg. So $1 billion. All right, so let's just watch this quickly, and I'm gonna fast forward that, and then we're gonna talk about that, what to look for on this chart. All right, so I'm gonna click on it. So as said last week, we were expecting Australian dollar to also, go in a daily correction, go for a retracement of this move all the way back to that top. All right, so Australian dollar is the bank which is, right now they are, super dovish. We can say that they are not, saying that they're gonna raise the interest rate like other central banks, other major central banks. All right, so they're gonna do that at some point, and Australian dollar gonna start to price in for that across the market. All right, so if you are selling that at the current price, at the lows, just keep that thing in your mind that they can start hiking the interest rate as well, and Australian dollar can price in for that too. All right, so last week we haven't heard anything huge from them, so they're still holding their loose monetary policy. So what we may see, so you shouldn't chase this move, okay, like I said last week. All right, at these areas you shouldn't chase the downside, okay, because you don't have a lot of potential on it. All right, so I'm still anticipating it to go for that bigger move, okay, so all the way back to that top. So like other pairs, let's talk about in a different way. Okay, so if I'm gonna look at the euro dollar chart or daily chart, so euro dollar went for an expanding triangle formation. Okay, like that. Euro dollar went for an expanding triangle formation. Yeah, CPI going to be very important for the next week. All right, so if we're going to see CPI, if CPI is going to drop, okay, we may see significant strength on the safe havens. All right, or we can see strength on the yen aggressively. Aggressive moves can happen over there on the yen pairs. We're gonna talk about those yen pairs too. Okay, so there you see. Okay, so you have seen already that expanding triangle on the euro dollar. Okay, so we may see that move too on the Australian dollar too. So Australian dollar can test that top too next week. Okay, so when you are looking to trade on the Australian dollar for more downside, I'm not anticipating this to continue to keep dragging more lower. There is possibility that the Australian dollar can continue to keep dragging lower, slowly back to that previous low. Not expecting big move. All right, so I'm expecting it to just retrace like euro dollar has done already. All right, and once Australian dollar gonna finish the move from the top, then we're gonna look for this to continue to keep dragging more downside. So keep that thing in mind when you are trading on the Australian dollar and US dollar. Okay, so what you are expecting on it. Okay, so hope that you got the point. All right, so if I'm gonna pull this chart again, similar way. All right, so what we were expecting on euro dollar from that top. All right, so we were expecting euro dollar to drop from that top. Okay, give us that wave. Right, so when we have seen that the euro dollar made that move, okay, we were expecting it to finish that move there at that top. Okay, this move, the move you guys have already seen over there. Okay, now euro dollar tagged. Okay, so if I'm gonna remove these arrows, and let's just remove that, and there we can see. Okay, now we can see that euro dollar has just broken down that previous low. All right, so this low, so the low which we have seen on 28th of Jan. All right, so this one too on 28th of January. So that has broken down this previous low. So there is the opportunity. Okay, we are looking this move to happen. Okay, like the previous one when we have seen that move, and then we were expecting this to continue to go all the way back to that top. So half of the move is already happened over there on the Australian dollar, US dollar, okay? But this has to drop and break that previous low. So if euro dollar keeps dragging lower, all right, the way which I have shown on the 1 hour time frame, all right, euro dollar keep dragging lower, okay? But this pair doesn't drop, all right? So that means there's gonna be a good potential opportunity on the Australian dollar, okay? So this is gonna, the euro dollar, Australian dollar, US dollar still gonna offer you a good, risk reward ratio from that top. So I'm expecting euro to continue to keep dragging lower. As you guys know that fundamental reasons, are really bad for the EU, for the Europe right now. So you shouldn't expect euro to get stronger during that. Okay, so hope that makes sense now. What you are looking, all right. So what you were looking previously and what you are looking right now. Okay, so price to hold those moving averages, and this next leg, I'm anticipating it to break down this previous low and give us a complete one more bearish leg, and which can extend up to 68, all right? So 68 or 127 of this previous move. All right, so which comes there. Okay, so 127 of this previous move, which comes over there at these areas. So 68.40 or 68 in best case scenario. All right, so if I'm gonna look at the lower time frame, so that's the bigger picture daily time frame. Okay, so the lower time frame picture is very much simple, similar like the euro dollar chart. Okay, so the trade you are looking, the max is the previous top. Okay, so you trade first, you are looking is the price to drop sharply. Okay, so you're looking it to break down. Okay, and breakout setup, drop this previous low gonna be the target. All right, and breakdown and continuation for more downside. All right, so once price reached this previous low, you are watching it closely. If it bounce off, then another leg higher, simple flat formation. All right, and then flat formation to continue to keep dragging lower all the way up to 68.40, or in best case scenario 68. All right, hope that makes sense, and you got the idea what you are looking on the Australian dollar. All right, so breakout opportunity for more downside. So, all right, so if crisis keeps getting worse, so these currencies are not going to rise. We are already on the edge of nuclear war in the world right now. All right, so Putin has played its last card. All right, and NATO has to play their last card too. So the card West got, they have played all their card. All right, so nothing is. So nuclear is the last card, right? Nuclear deterrence is the last card which Putin has played already today, all right? No, West cannot, come, better card than that, all right? So they only can come at the same level. They also can say that we have also, deployed our nuclear deterrence force, all right? Then the risk gonna be same on both sides. Okay, and tension gonna be at very high level. So during that, these currencies, risk on currencies, specifically Australian dollar, New Zealand dollar, they're not gonna rise. Okay, they're gonna drop like euro. They're gonna follow the euro. All right, so hope that makes sense. So the analysis which we are having on the New Zealand dollar is also very much similar like that. We are looking it to drag for another leg lower. Okay, so last week we were having rate the scene on the New Zealand dollar. That didn't make any huge impact, okay? But in the last weekly market outlook, we were expecting it to go for another leg, all right? So we were expecting it to finish that daily correction. Okay, so similar like that, if you remember that. So we had that. So if I'm gonna pull out the euro dollar chart, I don't think so I need to talk about that a lot. All right, so euro dollar is just simply, you know, broken out that previous low on 20 Jan. All right, 20 Jan. So this is still sitting at holding that top. Okay, so this has to break down, this has to come down and at this low, or need to break down from more downside up to 20 October lows, if you guys remember that. All right, so I think price has already, you know, reached to that 20 October lows somewhere there. Yeah, it has already tested that, but there are very high chances that this can even go lower than that. Okay, up to this previous low. All right, so if I'm gonna look at the lower time frame or further lower time frame, let's look at the 15-minute time frame. I'm anticipating it to gap down sharply as tension is very much high. All right, so these corrections were on Friday. Everyone was thinking that everything is just fine. We passed on the risk event. Okay, but over the weekend everything is just got more worse. So you are looking this to break out. Okay, and this is the first trade. Okay, and from this to flat formation. All right, or continue to keep dragging over this flat formation. All right, so hope that makes sense, lads. So now let's move on and look at the next. So dollar CAD also went higher last week. In the last weekly market outlook, we were expecting it to go higher. All right, so dollar CAD is a very important currency right now. Okay, because CAD is related to oil. All right, and oil is, you know, getting strong right now because of the geopolitical risk right now. All right, so I have already explained at the start of the weekly market outlook that what can happen. Okay, what are the worst scenario if ECB, you know, if West is going to kick off Russia out from the SWIFT. All right, then there may crisis, there may, you know, maybe a risk for oil and gas crisis like 1970 oil embargo. All right, just Google that or go and type it on the YouTube. You're gonna see videos over there what is meant by oil embargo. So that situation is building again, same scenario is building again. Okay, so if oil shock is going to come, okay, more oil is going to rise more upside up to 120, 130 or 150, or in worst case scenario 200 possibility exists over there for more upside on oil. Okay, as long as oil countries are not going to supply, OPEC is not going to break down. Okay, if OPEC is going to stick to their plan, then supply plan, then oil still can push more higher. Okay, so that's gonna give strength to the CAD. Okay, when you are buying dollar against the CAD, just keep that thing in mind. Okay, so oil strong, and we may see shock on this chart. Okay, like we have seen previously. If I'm gonna, you know, look at this. Okay, so when oil was getting strong, this is the whole move you can see over there. All right, so if I'm gonna look at the 4-hour time frame, the analysis is very much simple for the next week. Right now I'm anticipating this to gap up. All right, when market gonna open, this to gap up. Okay, so if we are going to see gap up, then price not gonna tag that previous low. Okay, then gonna keep running for more upside. So what you are looking, if it is not going to give you a gap up, then price to hold that and continue to keep rising for the next leg. Okay, like in the previous weekly market outlook, we were expecting price to hold these moving averages, if you do remember that. Okay, and continue to keep rising for more upside. So price held that and pushing more higher. So similar again, price to hold that previous low and continue to keep pushing more higher. Okay, I'm not anticipating dollar to drop aggressively against the CAD right now. All right, because there is a stagflation pressure on the dollar too, which means that Fed can raise the interest to curb the stagflation shock. All right, so dollar chief, pound, sorry, first. Okay, so pound is also went lower. We were expecting pound to drop on a daily time frame from that previous top, and in the previous weekly market outlook, we explained. Okay, I have given reasons, in the previous weekly market outlook, I have given reasons why we are expecting pound to keep dragging more lower, okay? And the move which we have seen over there, this doesn't mean that the bigger picture is going to change, if you guys do remember, okay? This is not, that picture, you know, was less likely on it. So we got a crash, we can say that, on the pound dollar because of that event, the event which occurred last week, all right, geopolitical event. So we are still looking this to tag that 20 October lows, okay? So if, as said, if things are going to get more worse next week, so pound may crash up to 20 October lows, all right, or 129. So it already crashed last week. So if I'm gonna look at the lower time frame, so there should be a chart on it, okay, when we were expecting it to drop from there, but it went the next correction, okay? The next correction, we were expecting this correction to break down, but it went for a bigger correction, okay? Then we were expecting this to form that pattern formation, right? This simple, you know, wedge, we can say that. We were expecting it to drop from this place, this area, that 130-650 area. So we got a crash, we got a breakout, sharp breakout. Okay, so what's next? So the next is that the target is still there, okay? This target for medium term, and the longer term target going to be 129, right? And for next week target, when market going to open, you are looking this to just simply first test previous low, which is come at somewhere, you know, 132.70. Okay, if I'm going to go to the lower time frame, we may see another leg higher, like I'm showing on 15-minute time frame. Okay, so you are simply watching this previous. So as I said, I'm anticipating breakdown. Okay, a lot of things has happened over there over the weekend. So we may see gap down there. Price can open somewhere there within these areas. So if it opens there, right? So then you are looking price to retrace slightly somewhere there within these areas, and then continue to keep dragging lower all the way. This is going to be the first short-term trade you are looking, all right? And then flat formation, like I have shown on the other charts, and then continue to keep dragging more lower. All right, so if I'm gonna look at the worst case scenario, okay, the worst case scenario, price to pull back up to 1 hour time frame if it doesn't hold the previous top, okay, which I have shown on the 15-minute time frame, this previous top, like euro dollar has done. Okay, let's look at the euro dollar, okay, euro dollar chart. You see there, euro dollar broke out that correction and went up to that 1 hour time frame correction. Okay, so broke out that previous top. So this previous top, so pound dollar can do that too. So make sure you understand that when you are going to look for a breakout on the pound dollar for more downside. Hope that makes sense. You see there, it's showing that correction is still underway. All right, but there, as I said, there is possibility for gap down. All right, so this move happened over there because on Friday everyone was thinking that it's over now. Okay, the threat, Russia, you know, giving to the Ukraine, Russia has invaded, and Russian gonna, you know, ran through the Ukraine. They're gonna hold on like Georgia, all right, and like other countries, all right, and things gonna be calm down. Let's just simply go and run after the risk on assets. Okay, but over the weekend, fundamentals got more worse. So you are simply looking breakdown. Hope that makes sense, lads. So dollar chief is not a best chart right now. Okay, so dollar chief, we may see another leg lower. In the previous weekly market outlook, we were expecting this ABC move and price to rise from the lows, okay, from the after forming new leg lower. So again, same for the next week. All right, again, same, nothing new, but this is not a best pair to chase. All right, so because, you know, fundamentals are not really good for because both are safe haven currencies, dollar and chief, both are safe haven currencies. They can stay sideways. So higher interest rate can push this pair more upside, okay, from the Fed side. So this is what you are looking as my structure is showing to you. Okay, so if I'm gonna look at the yen pairs, so these are the dollar pairs. Okay, dollar pairs, and if I'm gonna look at the yen pairs, so euro yen. All right, so on the euro yen, we were expecting euro yen to drop from this previous top. Okay, there. So it went lower slightly, and then we got the move which we were talking about in the the previous weekly market outlook. Okay, let me bring a clean chart over there where you're going to see the structure. Okay, so price has made that move. Okay, it has almost tagged hasn't tagged that floor. We still got a room. Okay, but the move which we were expecting it to give us from that top, it has made that move. So the pullback which we got over there on Friday, all right, so this is a good sign for this pair to drop more downside. I mean, it's pulling back, all right, it's pulling back. Good sign. If you are not into this trade from the top, there is still a chance to chase this pair for more downside. Okay, so I'm anticipating this to break down this previous low, right? So this previous low and go up to this 27 area, all right? So break down, at least break down, go lower than that. Let's just pull out some other pairs, okay? So let's just pull out some other pairs and what potential we are having on these pairs for longer term. Let's talk about that. Okay, so if I'm gonna use this currency to just let you know that what has happened over there. Okay, so we got more examples as well. So we got a recession, or we got a COVID. All right, we got a COVID, we got a bottom over there. Okay, we got a COVID and price just, you know, went lower to these areas. All right, so these areas. So if I'm gonna pull out my retracement areas, okay, on this previous move. Right, and I hope you see my, you know, fib lines over there. So if I'm gonna pull out my fib lines on this chart too, okay, so New Zealand dollar has dropped up to 70% against the CAD. All right, so New Zealand dollar is a risk on currency, CAD is also a risk on currency. All right, so why Kiwi, you know, dropped up to 70% against the CAD, even having higher, you know, yield, having higher interest rate. So interest rate in the New Zealand is 1%, okay, but in the Canada is somewhere close to 0 or 25 basis point, all right. So still it's going down because of the higher oil prices, all right. So similar situation we are having. So euro is also a semi-safe haven currency, yen is a safe haven currency. All right, so in a longer term, we may see drop all the way up to this 70% area. Okay, this 70% area, the move which we have seen here. So that's a longer term forecast. Okay, so it can take a lot of time, maybe a year or more than that. All right, so it took almost 350 or 40 days. So it means a year. Okay, so similar way, this wave also can take similar kind of duration. All right, but the longer term direction is very much clear which way you are looking this to go. So that's a longer term picture. Now let's talk about the lower time frame. Okay, what are the opportunities you guys are having for the next week? Okay, so you already got a drop from the top. So if I'm gonna look at this pair, you already got a drop from the top. So price is just pulling back very nicely. 1 hour time, 4 hour time frame pulling back nicely. If I'm gonna pull out 1 hour time frame, slightly went beyond the previous top. As said, fundamentals are not really good for this chart to push more higher. Tension is just, you know, increasing after every hour. Okay, so you are looking for this to break down sharply. Okay, break down and target gonna be that previous low first. This is gonna be the target. All right, and in best case scenario, as I have shown you, 127 of this previous move. All right, and longer term target going to be much lower. All right, so 127, which comes over there at somewhere 126. Yeah, so 126. So that's what you are looking. So if price, I'm anticipating gap down. Okay, so once price gonna gap down, let's say price comes somewhere there, right, and start retracing back. So you're looking price to stay below that gap. All right, stay below that gap and just break down and continue to keep dragging more downside. Well, that makes sense. So watch price action when you are going to get into the trade. So there you got the pound yen. Pound yen also dropped. Again, tension, similar scenario over there. All right, so I don't think so I need to pull out my fib lines from there to there and tell you that what is the longer term direction of the market. Recession risk is just climbing up very, very aggressively, very sharply. All right, and lower time frame, we were expecting it to drop from that previous top. Yeah, so there where we were wrong there. We were expecting this correction to break down, continue to keep dragging lower. Okay, but it went for a bigger correction and tested that top and gave us, you know, another opportunity to start looking for this to drop from this previous top. All right, or within these areas. We were expecting this to last week to break down within these areas. Okay, and this move to come, that move came. So what you are simply looking next week, same analysis. Okay, so 1 hour time frame, moving averages are just coming over there, price is just correcting over there. Make sure you understand that this one tiny move risk is exists over there. I'm not anticipating that move to come out, as risk is just rising. Fundamental risk is just spiking up. So short-term move is this. Okay, this is going to be the target. Flat formation may appear over there, and price to just keep dropping lower for longer term. All right, so simple and same analysis like others. Pound dollar we already have seen, euro dollar we have seen. So NOK and yen also same. Longer term, this is going to be the target. Okay, what is causing this to stay strong against the yen is the oil prices. All right, but yen, right now, as we know that there are, you know, extreme risk to the market from the geopolitical side, that hasn't played out yet in the yen. Okay, so you are simply looking slight risk over there. Okay, so that move you are looking and continue to keep dragging lower all the way up to 20 October lows. So in worst case scenario, price can visit that previous top. All right, so make sure you understand that. Okay, so gold, we'll talk about the gold too. So Aussie yen, also similar like other pairs. I don't think so I need to talk about that a lot. This 20 October lows are in a bigger picture, like I have shown you New Zealand dollar and CAD chart. So the longer term picture is the 70% drop on it. Okay, go all the way back to these areas. So if I'm gonna look at the lower time frame or zoom in, so next week you are looking this to drop. Okay, so if I'm gonna so which chart should I use for the example for your understanding? So at the start of the weekly market outlook, I have shown you euro dollar and Australian dollar chart. Okay, Australian dollar US dollar chart and euro dollar US dollar chart. Okay, what happened on the euro dollar chart in the previous weekly market outlook? Euro dollar went higher. All right, but Australian dollar US dollar went, remained bearish. Okay, and then after a couple of days we have seen strength on the Australian dollar US dollar, and Australian dollar US dollar tagged that previous top. Okay, so this pair has also done that. So the pattern is slightly different than the other charts patterns. All right, dollar pairs patterns. Okay, but structure is very much same, or the price action is very much similar like that. So what we have seen on the euro yen has broken down, tested these previous lows, okay, and closed on pin bar. All right, so euro dollar dropped, tested that 28 January, all right, and then recovered slightly. So Australian dollar US dollar has to go down, has to test that 28 January lows. All right, so that means you're going to have potential opportunity on this chart too to break down for the next leg lower. All right, so if I'm going to make it more simple, so you are watching these previous tops, price to hold that and break down. Okay, so your short-term trade going to be this previous low where my alarm is, which comes at 8160. All right, and we may see another leg higher from there. Okay, a flat formation, a kind of flat formation like I have shown on others. Okay, the longer the price gonna stay within these areas, okay, the longer the price gonna stay within these areas, the stronger the breakout we're gonna get for the downside. All right, so the sharper and stronger breakout we're gonna get to the downside, like the sharp breakout we got last week on the pound dollar chart. All right, so you are looking this to go there and all the way back that previous low. Okay, this is going to be the medium term target, short term target there, medium term target that previous low, and longer term target going to be much lower, as said, on the 70% retracement. Yeah, so that's gonna take a lot of time to reach over there. So you are looking these are the short term target, medium term target, all right, semi medium term target, all right, and longer term target going to be that 70%. All right, so on lower time frame we are having, you know, a sharp correction over, as said. We have seen strength on the Australian dollar. Okay, why? The reason is very much simple. Very much simple, because Australian removed, COVID restrictions. All right, that optimism has given some strength to the Australian dollar. Okay, but it is not going against the rest of the market. Okay, so rest of the market is struggling. Australian dollar also gonna follow that, so it cannot go against the rest of the market. So you are simply looking for that sharp breakout. As I said, gap is possible this low, all right, this short-term target, and longer term much lower. All right, so let's just look at the next. Kiwi is also similar. CAD is similar like the CAD. Uzi yen, Kiwi CAD is similar. CAD yen, all these three charts are similar. So the target you are looking, short term is there, medium term is there, okay, and longer term going to be much lower, up to 80%. Okay, semi medium is there, and longer term target going to be that 20 October lows. So let's just straight away go to the lower time frame and this breakout. Okay, so this breakout to happen, and you are looking this to drop aggressively to the downside. All right, so same. So Kiwi is also same. So I don't think I need to show you different direction we are not having neutral analysis on the yen pairs for the next week. All right, so analysis is direction is very much clear. So just need to see price to fall into that direction. Okay, so Kiwi yen structure is very much clear, and lower time frame, same analysis, price to stay below that, the correction which is appearing over there, sharp correction on that 15-minute time frame. Okay, that to break out sharply and correct, and the short-term target going to be that. All right, and longer term, as I have shown you on other charts for more downside. All right, so use reasonable risk. Do not, trade blindly. All right, so dollar yen to drop for longer term to the downside. All right, so we are expecting it to drop too aggressively to the downside. Okay, but make sure you understand that there is a risk for the Fed hikes. Okay, because of that, dollar is strong. So next week, you are looking for this to stay below these tops. Look at that top and then that top, and break down aggressively to the downside. That move. Okay, so chief yen is also drop on daily time frame. This move to happen. Okay, so this chart has to drop up to 70% in longer run. All right, so much lower. Okay, so up to 106, those areas. So it has pushed more higher. So there is a daily correction at this area. So you are looking for short moves up to these previous lows, and in a best case scenario, sharp breakdown for more downside. Okay, this daily chart is enough for you to understand rather than looking at the lower time frame. All right, this daily chart is enough. So watch lower time frame for that. So I'm going to ignore this. There is also possibility it has completed that move. Okay, so I'm going to go through quickly. So you are looking for those moving averages to hold on for a time frame on SEK and yen, and breakdown for the next leg. So reason why this is not a good opportunity right now, because it has moved a lot, already broken down. So you are simply looking this to break out and continue to keep dragging more downside too. All right, breakout, and short term target going to be that, and longer term going to be much lower as shown on the other yen pairs. So dollar, yen, rand. All right, so rand is still strong because of the higher hawkish central bank. So this is breakout, okay? So expecting this daily correction to break out for more downside. So slightly risky right now, okay? But as we can see that there is fundamentals are pointing a strong sharp moves on the yen pair, so you are looking for that. So Uzi Chief, very much similar like the other yen pairs, Uzi Yen, all right? So price to just hold these previous top, okay? And for the next week, you are looking short-term move to this previous low, medium-term move to that previous low, all right? And longer-term move as shown on the other yen pairs up to 670% retracement of this previous move. Okay, so this previous move, that's a 70% retracement. So we are in a bearish trend on these charts, okay, longer term bearish trend. So they are just simply heading to that, heading to the bearish trend for longer term. So you are watching those areas, all right? Watching those areas for the next week. So we got a oil. Oil is interesting as said. Okay, so I think I don't have data for 1970 on it. Okay, but there we got the, you know, stagflationary shock, we can say that. Let me check the inflation. Okay, so if I'm gonna pull out oil chart on it, let's just put WTI. All right, so there we can see we have, you know, not a stagflationary shock, okay, but inflation was significant at that time because Fed was, you know, 2% target. There was a 2% target. So at that time, so inflation was also pushing higher at that time when oil was spiking up, right? Oil was running around 140, 144, all right? So when it was running at around 144, so inflation was also pushing higher. So we may see that stagflationary shock as well. Right, so there we can see, so inflation is just spiking right now. All right, oil significantly higher than this previous 2008 level. All right, but oil is still behind that. Oil is still, you know, far behind that 140, 144 areas. So as I said at the start of this weekly market outlook, if things get more worse, okay, so we may see, you know, shock. So what can be the worst scenario? Okay, as said, if oil, you know, West stop buying natural gas and oil from the Russia, that's going to be a worse scenario, worse outcome. Okay, that can push oil more higher. So what you know, US, Japan, and other countries are doing right now, they are releasing their reserves. All right, their strategic reserves, strategic oil reserves. Yeah, which is causing price to struggle right now. Okay, so on the other side, oil producing countries, they are limiting the oil supply. All right, and oil depending countries, they are releasing their strategic oil reserves, means that shortage, right? So oil shortage is being created artificially by oil producing countries. Yeah, and on top of that, if Europe start buying oil and energy, oil and gas from the Russia, then that can create crisis. All right, oil crisis. So there is a reason for the oil to push more higher up to 120. All right, so 120. This is a very strong reason for oil to keep pushing more higher. So keep that thing in mind when you are looking to trade on oil. All right, so if things gets, or there is another possibility. All right, there is another other scenario, other possibility. What's that? If oil OPEC countries, you know, break down, okay, their agreement, if the, I mean, OPEC break down, all right, OPEC countries, you know, I mean, we can say that if they start fighting like they have done in 2020, all right. So we were having, you know, fight between Saudis and Russia. So Saudis was producing a lot of oil, bringing more oil into the market than the Russia, which caused the oil to keep dropping more downside. Okay, so the scenario is if, you know, West, US or Europe, all right, so all these countries which are highly depending on the oils. So if West, you know, successfully break down the OPEC countries, all right, and let's say if Saudis, you know, right now Saudis are on the Russian side, okay, they are, you know, producing oils as they are, you know, having agreement every month, OPEC agreement, so they are producing oils according to that. So if any country break down from that OPEC countries, okay, then we may see more supply of oil. Then, you know, more supply can come into the market. Like, you know, US right now is trying to have a deal with the Iran, nuclear deal with the Iran. Okay, that means more oil can come into the market from Iran. Okay, if that comes, this is also going to be a good sign for the West. Okay, more oil going to come from the Iran, or energy price is going to come down. All right, so means that no stagflationary shock to the market. Okay, or maybe any other country like Saudis, you know, stop supporting the Russia and you know, get back into the West camp again and gonna start producing more oil. Then the whole scenario, the whole picture which we are having right now, okay, that the West is depending right now more on the Russian oils. Okay, that's dramatically gonna change. When that dramatically gonna change, okay, right now, you know, Putin is, you know, on West right now because of this you know, edge, because of the gas and oil edge. Then this picture dramatically gonna change. Okay, when that dramatically gonna change, then oil gonna crash, oil gonna start dropping very, very aggressively to the downside, and again everyone gonna be relaxed in the West, and they're gonna have upper hand on the Russia then. So this picture can also emerge. There is a possibility of that. So keep that thing in mind too, guys. So what to look for on oil? Now let's talk about that. So what to look for? So oil still very much similar picture like last week. Okay, so one more leg up is possible. And after having new highs, you are looking at sharp breakdown, sharp sell-off. So in the previous weekly market outlook, we were expecting it to drop aggressively to the downside. Okay, so we were expecting it to drop from that previous top. It went lower from that previous top, okay, but again went into the correction. So I do have those charts in my, you know, channel, in my you know, channel. So it will take, you know, time to bring those charts. So I have explained to you there, if you remember, okay, if price come and hold those moving averages, you are looking at another leg higher. So picture is very much similar again. Okay, so a lot of things has happened over there over the weekend. So it is very less likely that oil gonna break down for more downside. Okay, very less likely. Picture is very, you know, bullish right now for the oil. So we may see another leg higher on oil. All right. And if during the week fundamentals develop in the favor of the bearish oil, okay, then after having another leg higher, then start dropping for the downside, for the longer term to the downside, as I have, you know, explained to the couple of scenarios. Okay, if those scenarios start developing over there, then again after new high, then drop. So make sure when you are, you know, trying to sell the oil, so trade it it precautiously, okay, because fundamentals are not supporting right now for big drop. We are still looking for longer term drop on the oil. All right, so as it does not support for the longer term. Higher oil prices does not support for the longer term, so oil has to drop. But right now, short term trend is still bullish, okay, and still can continue to keep pushing more higher. The way price is doing right now, above those moving averages, okay, and every time when you see the price is forming new high, you are expecting it to drop very, very aggressively to the downside. Okay, so countering oil right now is very, very risky. Okay, make sure you keep that thing in mind, given the current circumstances, current, you know, geopolitical circumstances. So Brent is also similar like that. So on the 4-hour time frame, so price, you know, less likely, we are not expecting this move to happen right now. All right, as long as fundamentals are not changing. Okay, so another leg higher is very likely, another leg higher back to that top or new high, okay, up to 110. It can go up to 110, and from 110 drop aggressively to downside. So same scenario, same analysis like WTI. Okay, so Bitcoin. So in the last weekly market outlook, we were expecting Bitcoin to drop. Bitcoin went lower for the next leg. Okay, so looking at the geopolitical scenario right now, there is no reason for Bitcoin to continue to keep pushing more higher, as Bitcoin is proving more like a risk on assets, okay, not like a gold. So struggling to push more higher during the geopolitical uncertainties. All right, so that was the main reason we were expecting last week Bitcoin to drop another leg lower. All right, so for the next week, as we know that fundamentals are not supporting right now for this to continue to keep pushing more higher. Okay, for next week, this leg lower to happen. Right now, market is open, okay, but it is feeling the heat. It is feeling the heat right now. Okay, so another leg lower, test this previous low, or in worst case scenario, break down, go up to 20 or 15, which is less likely, and then continue its bullish trend for more upside. All right. Okay, so what's happening right now? So West is looking to remove Russia from the SWIFT. Okay, Russia has also their own alternative for SWIFT. Okay, they can use that. All right, or they can go after Bitcoin. All right, they can use that. I don't think so they're going to rely on the Bitcoin, all right, as it is very volatile right now. So they're going to use their own system or other, ways to get paid for their energy cost. So in case if West, completely remove Russia from the SWIFT. So this is what you are looking, breakout and another leg lower. So if I'm going to pull out my moving averages, okay, on a slightly bigger time frame right now, where you can see clearly. So daily are far away right now. Daily are far away. So let's just look at the 8-hour time frame. Okay, so price to just simply stay below this top, all right, and this top, these two tops. So hold that top. If it doesn't hold that top, okay, then a bigger correction going to be over there. All right, another leg. Okay, another leg back to that previous top. All right, then again drop from that previous top. Hope that makes sense. So now let's look at the Ethereum. Ethereum is also same. I don't think so. I need to talk about that a lot. All right, it's the same picture, same analysis, same pattern, same behavior, same correction, struggling, broken down last week in the last weekly market outlook. We were expecting this leg to appear. All right, so again another breakout and tag this previous low, or in worst case scenario below 1800. BNB, same picture. I don't think so I need to talk about that a lot. Same picture, okay, previous bottom, previous low, 1 hour time frame is similar like that. Another leg, another breakout, sharp move. All right, so or the 8-hour time frame, moving averages like I have shown on the other chart on the Bitcoin. Same picture, this top or that top. Okay, so now let's look at the Nikkei index. So Nikkei to go down to, so Nikkei is dropping. Okay, so we are still expecting indices to stay under pressure as long as fundamental geopolitical scenario is grim. Okay, another leg lower next week. So stay below those moving averages. Another leg lower. So the pattern you are watching for longer term is this on the indices. Hope that makes sense. All right. So this is the pattern which is just appearing over there. Okay. So if central banks start raising the interest rate aggressively and going after the inflation, then this might be a longer term bearish market. Longer term bearish stock market, which has started over there from that top. We topped over there. So still, it's too early to say that the bearish market has started, the bearish cycle has started. Okay, like we have seen in 2007, like this cycle. Okay, in 2000, I mean, we were having crisis in the in the US at that time. Okay, but right now crises are emerging in the Russia right now. Okay, banking crisis, we can say that removing them from the SWIFT is also going to create banking crisis. We can see blow up that of that back to the EU markets, all right, EU banking sectors, okay, and over the US banking sector too. So these are very, worse, crises which are emerging over there. So it's too early to say that we are, so upon that, central banks have to fight with inflation, all right. So that's also a stagflation shock. So need to raise the interest rates. They cannot keep the interest rate close to zero while inflation is pushing higher. Okay, so we might have topped over there on the indices, and we may have another bearish cyclical cycle on the indices, or like that previous one, okay, which can drag more lower like this. So it's too early to say that, depending on the central banks, how they are going to tackle with the current geopolitical scenario and higher inflation scenario. So what structure or what pattern you are looking right now? Okay, and next week another leg. I'm not anticipating this leg to appear over there right now, all right, but there is possibility. Keep that structure in mind. Okay, this is what you are looking right now. Okay, another leg basically, all right. So another leg lower like that, another leg. So what we were expecting in the last weekly market outlook, okay, we were expecting in the last weekly market outlook another leg over there, okay, this to there and then drop. That was our structure. Okay, our structure was that. Yeah, the expanding triangle to go for another leg higher and then drop, or break down and continue to keep dragging more lower. Okay, so we have seen that leg, okay, but that leg didn't, went higher, did not complete that pattern, the pattern which we were expecting to appear over there before drop. So the leg appear over there, okay, it's a small leg appear over there, and then price went lower for another leg, the big leg which we were expecting. So we're still in a bearish market on the Nikkei index. Okay, it's very important to understand that how Nikkei is doing right now, because the trade's gonna form on the yen pairs because of this. So this is what you are looking at, another leg lower next week when market gonna open. Okay, this next leg test that low or new leg lower. S&P 500 is also similar like that. Okay, last week on the Friday, everyone was happy that the crises are gone. Let's just simply buy the indices. That's the structure. There is possibility that we can see more on, as I said, guys. Okay, this might be a start of a bigger cyclical bearish market drop. Okay, like we have seen that in 2007. There this chart is showing you. Okay, this might be a start because crises are emerging very, very sharply like that. This might be a start of that bigger cyclical drop on the US indices. So it's too early to confirm that, to say that we are in a bearish cycle. Okay, but keep that thing in mind when you are buying the indices. All right, if they continue to keep rising, great. If things are getting good, great. If not, then do not hold your positions for longer term. All right, so there is possibility for that one more leg. I'm not anticipating. I'm just simply anticipating market to open and just simply go down, break down that previous low. Okay, this is what I'm anticipating, and then find another floor over there and this move, or in best case scenario test that previous top, which is less likely right now, lads. All right, so if I'm gonna pull out my moving averages, you are simply looking for the price to stay below those moving averages. All right, stay below those moving averages. So S&P 500 to stay below that previous top and stay below those moving averages. Next leg lower. All right, so that's so if you are shorting the indices, you're selling the indices. Okay, so trade with care. All right, so trade with care. So selling, shorting the indices is very risky. Okay, so better if you understand that, then okay. If you don't understand that, then simply go after the yen pairs, buy the yen. All right, both trades are same. Yeah, when equities goes lower, you're gonna get that trade from the yen pairs, yen strength, because of the safe haven status. Okay, when equities goes down aggressively, yeah, so trade gonna be very much similar, like depending on your risk. All right, so currencies are safer than the equities. Equities are safer for buy, but when it comes to short the equities, okay, then risk gonna be high over there for shorting the indices. Up to you guys, wherever you are comfortable with your risk. So Nasdaq 100 index is also very much similar like that. As said, this might be a cyclical top on the Nasdaq 100 index for longer term bearish cycle, depending on the fundamentals. All right, on lower time frame, very much similar like the S&P 500. Okay, this bigger correction is appearing over there. What we were expecting last week, another leg to appear over there and then drop. Okay, but leg appeared but didn't continue to keep pushing higher up to this area. Yeah, breakout of that top and then went that next leg lower. So went lower. So what you are looking, this bigger wedge which is just appearing over there. So if fundamentals start getting better, then this is going to be a perfect buy opportunity for more upside. Okay, right now I'm anticipating it to go all the way up to 12,000, go below that 12,000. Okay, so it's a big drop. It's not a small drop. Okay, so it's a big drop. So almost 28% drop. So is there a reason for that drop to happen? Yes, there is a reason. Okay, because the companies which were supporting strength of Nasdaq 100 index are struggling. Okay, and you guys know that Facebook or Meta is one of them. Meta is simply struggling. So let's just find out that chart. All right, so all these companies which were causing Nasdaq 100 index to just keep rising for more upside, they're struggling. All right, so they are struggling. So we have seen more than 50% drop on the Facebook. More than 50% drop on the Facebook. All right, so Zoom just gone down back to that 80% drop on Zoom. All right, and Tesla also dropped. All right, so there we were expecting Tesla to drop from that top. Okay, if you remember, I was telling you that this is not going to sustain its trend for more upside, okay, and going to drop from that top. So because when insiders sell their shares, that means they know more than you. When they start selling their shares, their company shares, when Elon Musk sold his shares, okay, he knows more than you how his company is performing. Okay, that was a signal, that was a sign that the drop is going to come on the Tesla. All right, so he was selling his shares somewhere there, okay, within these areas. All right, so these areas, these tops. So this is also going down, means that we're going to have pressure on the indices. All right, so Apple is also under pressure, Amazon also under pressure, Nvidia is also under pressure, going down. Okay, these are the majors, 40% down, major companies which were supporting to the Nasdaq 100 index. Okay, so hope that makes sense, lads. So let me check if I do have another list. No, I haven't added. So that's the reason. Okay, we may see more downside on the Nasdaq 100 index, also because of the geopolitical reasons as well. So that's the structure. Okay, the structure is very much similar like the S&P 500. Okay, we are expecting another leg lower. Let's pull out moving averages, price to stay below those 4-hour moving averages and continue to keep dragging lower and break the previous bottom, previous low. So fundamental geopolitical scenario gets better, still there's going to be problem. All right, still there's going to be problem for higher inflation. Okay, so this risk is possible, breakout is possible, but less likely. So keep that thing in mind when you are looking that to drop. So this is the longer term opportunity. Okay, if you are a very longer term investor and can hold for years, okay, this is the opportunity. Okay, the opportunity which is just building over there on the Russian index. This is the opportunity which is just building over there. So as you guys know that West is putting a lot of sanctions on the Russia. That's causing Russian stock market to crash. All right. This is building, you know, a opportunity. Okay. If you remember the COVID crash on the Nasdaq 100 index and you know, S&P 500, US indices across the world. So this is, you know, setting up for a longer term buy opportunity. Right now, fundamentals are not supportive, but soon it's going to find its floor over there. So once price going to find its floor over there, then there's going to be a longer term buy opportunity. Okay, what can happen? We may see a sharp correction over there and price can again fall over there. All right, so price has already lost almost more than 60%. It dropped more than 60%. Okay, dropped more than 60% of this longer term trend. This is a buy opportunity for longer term. All right, so if you know, then great. How to trade? If don't know, then this is not for you. All right, so what's happening on lower time frame? A lot of gaps are happening. Do not chase the price above that you know, 2500. Let the price come. It's definitely going to come more downside when they're going to be sanctioned, specifically the SWIFT sanction on the Russia. Okay, so we may see breakdown of this previous low. All right, and it can drag more downside. The lower the price goes, it's just simply a buy opportunity. All right, the lower price goes, you can buy this, you know, and hold that for longer term, you know, like this, buy one, add more there. All right, inverse, I don't think so it's going that much far away, guys. It's going to be disaster simply if it goes there. 88% tracement, all right, or more than 80% draw, we can say that. All right, I don't think so it's going there. So it's going to be complete disaster if it goes there. Complete disaster for the Russian companies, all right, for Russian stock. So buy more, and once price start rising, okay, so you can add more all the way back to that up. So it's a longer term chart. Okay, so when I say longer term, means that for years, for more than 2 years, 2-3 years. All right, so this is not a short-term investment. Okay, so the previous cycle was so long, took, you know, almost 12 years. Okay, but I don't think so it's going to take 12 years. When we're going to have, you know, some certainty into the market, people are going to run after that, and it's going to spike up very, very aggressively. So we had example on a Brazilian index. Okay, so it's gonna behave similar way. So next time, lads. So I don't think so. I don't have that chart. So BOWEX or something, that it's symbol name BOWEX call. So we have crash that has lost a lot of its value and then recovered again. So keep that thing in mind. All right, so Ruble to continue its bullish trend simply. All right, so Ruble, they're gonna be manipulation on this because central bank said that they're gonna, gonna try to manage the exchange rate. Okay, so manipulation gonna be over there. Perfect manipulation gonna be over there. So it's not at a best price where you can chase that. All right, so if it's pulling back on your daily time frame, then you can, you can look for this to continue its bullish trend for more upside. All right, so if it pull back, then continue. Not at a best spot right now. It's trying to break the previous top. Cat Chief also going to be a drop next week. So 4-hour time frame, drop. Okay, so you're looking this to draw for more downside back to that previous low, or watch these previous resistance. All right, these areas. So EuroCAD to break out for more upside. Bigger picture is similar like the previous weekly outlooks. Okay, longer term go higher, and on lower time frame we may see another leg lower, small leg lower back to that previous low and breakout for longer term. Okay, or there is possibility for sharp breakout because of the geopolitical risk. All right, and Punk Chief also went lower. We were expecting it to break down, hold the moving averages and break down. Okay, so there is possibility for this bigger drop all the way back to that previous low. So went lower, held that previous top. We were expecting it to drop from this previous highs. It dropped. If I'm going to look at the lower time frame, similar analysis like other charts. Okay, right now price is holding that 1 hour moving average. So you are simply looking at this to break down aggressively when we're going to open and continue to keep dragging more lower. First target going to be that previous low, and in best case scenario, more downside as shown on other charts. Okay, so Euro Pound to spike up from the floors. Things are getting messy. Bigger chart is showing to go that direction. All right, and trying to find its floor. Euro Pound is trying to find its floor over there. Okay, there is possibility that we're going to have gap up on it. Okay, and price going to keep running for more upside. Yeah, if gap up comes, price to slightly pull back. Okay, if gap doesn't come, then 4 hour time frame or slightly deeper pullback back to this previous low, and then continue to keep pushing more higher. Structure is still similar like the previous one, hasn't changed a lot. Okay, so pound Australian dollar went lower because of the optimism in the Australia. All right, so we were expecting last week pound Australian dollar and pound New Zealand dollar to give us this much, retracement up to these areas. All right, or go back up for another leg on lower time frame, another leg, and then drop, or give us a big drop over there. So we got a drop. Okay, so as said, we need to see another leg lower on the Australian dollar, US dollar, as euro dollar is already dropped up to 28 Jan. Okay, so weaknesses on the Australian dollar against the dollar gonna push this pair more higher, gonna give some strength to the pound. All right, so first of all, drag more lower, hold this previous low, and then keep the trend intact for more upside like that. All right, so do not rush after the buying. Let the price find its floor, and once trend gonna start building up over there, then chase that. Okay, so risk is over there. So these currencies does not fall when we are having geopolitical uncertainty. All right, if you remember, when we were having Brexit or last crash, recession happened. Okay, this is the recession top, COVID top. All right, so right now geopolitical uncertainty is building over there. We're not gonna have that drop. Okay, price gonna go in a bigger sideways market like that. All right, or until something happens fundamentally, fundamental shift is going to come between the UK and Australia. Then we may see more downside. The trend gonna continue for more downside like this previous drop. Okay, so normally when we see shocks, okay, this is the 2007 shock. Okay, price aggressively went higher. All right, and then this is the fundamental divergence between the UK and Australia when we had Brexit. Okay, and then the recent shock we have seen over there at that top, COVID shock. Okay, so right now geopolitical uncertainty is also appearing over there. That's less likely that the trend going to continue to keep dragging more lower. So we may see bottom over there, and price going to continue to keep rising more upside again for another leg higher. So same goes with the pound New Zealand dollar. So pound New Zealand dollar also went lower. Okay, so breakout, sharp breakout. Right now trend is bearish, so you are looking sharp breakout. This trend, sharp breakout, or price to find its floor. It hasn't found its floor, it can drag more lower. All right, so sharp breakout. If sharp breakout come because of the fundamental reasons, geopolitical risk, another leg back to that top. That's what we are expecting. That's what I have shown you on the New Zealand dollar, US dollar. Okay, so pound CAD, that's the picture. That's what you are looking. These are not the best pair right now for a while. Look at these three pairs. So that's what you are looking. That's the picture. All right, so neutral analysis. So euro Aus to go higher. Okay, price to break out. We were expecting in the previous weekly market outlook 70% retracement up to this area, if you remember. Okay, so it has gone more than that. So 88% retracement. okay, which is a good sign. So you are simply looking for a breakout, okay, breakout, correction, and another leg higher. Okay, this is the breakout, or this is the where price found its bottom over there. Another sharp move over there. Okay, another sharp move. So you are looking this whole corrective leg to breakout similarly like I have shown you the previous ones. Continue to keep rising for more upside. Yeah. So same goes with the Euro New Zealand dollar. Sharp breakout of this move. Okay, and another leg. Price slightly can drag more lower back to this previous low. Yes, but yes, you are right. Okay, if they're gonna be, there is, market is telling us. Okay, market priced in everything. Okay, market is even ahead of these, politicians. All right, so market is ahead of these politicians. Market knows better than others, better than these politicians. Okay, this market knows that either they're gonna strike these nuclear missiles or not. Market is telling us they are just bluffing. All right, they are just saying, so they're not gonna strike that. Okay, so if market knew that they're gonna strike that, then you're gonna people already gonna take off their money away from the market, so they're not gonna kept their money in the market. All right, so market is more clever than these politicians. So you are looking New Zealand Kiwi Chief to continue to keep dragging more lower too. Okay, so price to hold that previous top and drop from that previous top. Okay, and the target gonna be this previous low and 59. All right, so 59 or 60. So Kiwi CAD also keep dragging more downside. Okay, all the way back to the previous floor, these areas. So if I'm gonna pull out the lower time frame and some moving averages on my chart, all right, daily moving averages on my chart. Okay, price is struggling under those daily moving averages, which euro dollar has already tested that and went lower, if you remember. Okay, euro dollar has already done that, tested that, went lower. What we were expecting in the previous weekly market outlook, this correction to hold and continue to keep rising for the next leg. All right, so it has nicely done that, went up for the next leg, next bullish leg. This expanding triangle nicely played out. Another leg appeared over there. Okay, testing the daily moving averages right now under that trend line. Okay, broken out already. Euro already tested that previous low, 28 Jan low. All right, so 28 Jan low comes there. Okay, so euro dollar is testing that 28 Jan. And this pair is still playing under the daily moving averages. Okay, so which means that this opportunity, price is already breaking down those 4-hour moving averages. Okay, so you are simply looking this to go down, all right, and stay below that 86.40. Yeah, so same setup gonna be over there on the Uzi CAD. Okay, so last week in the previous weekly market outlook, what we were expecting this to continue. All right, yeah, this correction and this next correction, next leg appeared where price is playing right now. Same analysis like the Australian dollar, US dollar, or euro dollar, like previously. So these charts are still behind. Okay, so staying under those moving averages, next leg to come out. All right, so fundamentals are still not supporting for the Australia to raise the interest rate. So 4-hour time frame correction is just simply sitting over there. Okay, price to stay below that, break down, continue to keep dragging lower. These are the easy charts. All right, don't need to talk about them a lot. So neutral, all right, but neutral bearish. All right, so neutral bearish. Yes, that's the analysis. Not a best chart right now to short it. Okay, I'm going to pause on the Euro Chief and Euro Australian dollar, New Zealand dollar. Okay, so price to hold that previous floor. Okay, and next run. All right, this crash, next crash. Okay, so dollar Chinese yuan is similar like the previous weekly market outlook, slowly dragging more lower, longer term breakout for more upside, and on lower time frame next week to give you that aggressive move for upside. All right, so US 30 similar like other. So all these indices are same. Okay, first I'm anticipating another leg lower, this one more drop. Okay, not expecting bullish leg. So German 30 also expecting one more leg and then continue to keep rising, break down sharply, okay, and then give us some floor over there. So UK 100 index, so expecting it to drop to, okay, this one more drop. This can get more aggressive for more downside, okay, as fundamentals are not good for them. So gold, okay, gold can continue to keep pushing more higher. All right, so in the previous weekly market outlook, we have spoken about the reasons why gold should not continue to keep pushing more higher, okay, because of higher interest rates are coming. But the developments which we are having right now, geopolitical risk, that's very dangerous for the gold bearish. All right, so for selling gold. So when you are looking to short the golds, okay, make sure you understand the geopolitical risk. Okay, I'm still anticipating it to drop for another leg lower, but that case is not there at that right now. As we know that the fundamentals are not supporting. They may change. All right, so these fundamentals may change within the next couple of weeks, within 2-3 weeks. All right, so Fed can change those fundamentals with their aggressive hikes. Okay, or let's say if geopolitical risks settle down, then we may see one more drop. Okay, but right now there is a risk for more upside. Okay, more upside back to that previous top. So either stay away, do not sell the gold. Okay, if still want to sell, then make sure you understand the risk. If looking to buy, I don't see a good potential over there on the gold for upside right now. Okay, I wouldn't suggest you to trade on the gold at such levels. All right, it can go either way. It can continue to keep rising because of the geopolitical risk. It can drop because of the higher interest rates from the aggressive higher interest rate from the central banks. All right, so right now Fed is saying that the geopolitical risk which we are having is a deflationary event. It means that this event should drive the inflation lower. Yes, all commodities, not just wheat. It's a common sense, guys. You should understand that when there is a shortage, right? Or right now Ukraine was producing somewhere close to 25%. I'm not sure about exact figures, right? Wheat. Ukraine was producing wheat somewhere around 25% or maybe more than that, right? So now they're going to be supply shortage of wheat from Ukraine. So what's going to be the impact of that? Higher prices. So it's just simply a common sense. When you go to a shop or buy something, if that shop doesn't have that thing, all right, and you are willing to pay more than that, more for that product, for the price which that product is having, that means supply shortage. Okay, so it's a common sense. When there is not enough supply, then you will be able to pay more because of your need. Okay, so gold got a risk for more upside. So similar way, silver got a risk for more upside. Okay, back to the previous top. So a kind of neutral analysis on the commodities, guys. All right, and there is also a risk for the copper to push slightly more higher back to that previous top. All right, but longer term picture is still bearish. If economy, if we are going to see recession, all right, recession because of this geopolitical risk, this is very aggressive risk. Okay, then copper is not going to continue its trend for more upside. Copper gonna drop. Okay, copper gonna drop. Copper not gonna continue for more upside like gold or like silver. It's gonna drop. All right, so yeah, so commodities, these commodities not gonna drive. So we were expecting commodities to drop because of the higher interest rates gonna come, but right now this geopolitical risk is is that which can, change that narrative for a while. As I said, stagflation shock we may see, guys. So that stagflation shock means that higher commodities prices. Okay, so we may see more upside on corn. Another lag is possible, can continue. So if you are trading on them, trade with care. Cotton, okay, cotton still can push more higher, but the longer term picture gonna be bearish. All right, so soybean also trying to struggle and trying to break down from that previous top, trying to find its top. Okay, but as I said, geopolitical risk still can drive the prices more upside. Keep that thing in mind. All right, so wheat also went higher. Okay, so neutral analysis, okay, right now, so better to stay away as long as there is a geopolitical risk. All right, so same analysis on the small caps. Like other US indices, we are having that bigger correction which is just appearing over there. Okay, this is a continuation pattern formation for more upside. Okay, another leg lower and then continue. US Russell 2000 is already in a bearish cycle. We can say that. All right, so small caps are struggling to maintain their bullish trend. So this flat formation to form and another leg lower. Okay, as I said, we may see gap down. Okay, this gap down may appear over there. Price may not test that top, and that risk exists over there. The price gonna start dropping from more downside from current price. May not test that previous top. Okay, so US Russell 3000 is also similar. Okay, so that wedge is appearing over there. So another leg over there next week. Okay, this leg to appear over the next week. Okay, another leg. So Euro stock is also same. Euro stock is also in a bearish correction. All right, so very much similar like US indices. So it's struggling more. So Europe stock, okay, Euro stock gonna struggle more next week. Okay, if sanctions SWIFT, okay, if they are simply going to remove Russia out from this SWIFT, this is not going to continue its trend. Okay, we're gonna have a more aggressive drop to the downside on Euro stock 600. Okay, and same goes with the Frankfurt T. They are already in a correction. Okay, they can drop more up to 38%. I said previously. All right, 38% comes there at this area up to 6,000. There is a risk, proper bearish drop. Okay, bigger correction risk exists over there. So if I'm gonna look at the 1 hour time frame, okay, there is no reason for the bullish trend to continue right now. There is a higher interest rate risk. There is a geopolitical risk. All right, there is a oil embargo risk, gas embargo risk. So equities are not good for the bullish trend right now. Okay, so another leg lower breakdown. So if I'm going to pull out my moving averages, yes, stay below those moving averages. So I have shown you risk off moves throughout the market for the next week. I haven't shown you risk on moves across the market. Okay, so crypto simply bearish. There is no reason buying the cryptos when there is a strong geopolitical risk. So Solana to drop, as said in the previous weekly markets, so keep dropping lower all the way, be more cheaper. All right, same analysis like in the previous weekly market outlook. They haven't changed a lot since then. All right, so ADA going down, as said in the previous weekly market outlook, more downside, be more cheap. All right, so Terra went higher for another leg. Okay, so it can slightly push more higher, but again, there's going to be pressure for this to drop. All right, so not a best right now. Okay, so it went higher, so it's not at a best spot where you can buy this to more upside given the current circumstances. So sand and dropping for another leg. Okay, drop more, new low, and In a best case scenario, you can expect it to go all the way to this previous low. GT drop more. All right, so KuCoin, another leg lower. Let's remove that. Okay, another leg lower back to this previous low and then continue its trend. Dogecoin, yeah, more downside. Sit. Okay, so sit over there like this. So you need to see this to do that way. Okay, so like that, somewhere there. You need to see this to come down. Okay, sit over there. Okay, and then break out. Do not chase this at the current price. There is no reason. There's no fundamental reason to chase these coins. All right, so all these are struggling going down. All right, so I haven't updated my structure on them. So OITA to go down to, all right, so DOT to go down to, okay, so Litecoin, it's also dropping, go more downside. They are not bullish yet. All right, so let's just finish here, and let's just finish here. All right. Okay, so if you guys are having any question, then let me know. We're gonna talk about that. This is also a longer term buy opportunity. Okay, right now it hasn't finished its bearish drop. Okay, it hasn't finished its bearish move. Okay, but we may see, you know, price can do like that. Okay, this is gonna be worst case scenario. Let's say if EU gonna stop buying the natural gas or the LNG or natural whatever, yeah, whatever. Okay, when they're gonna stop buying gas from the Russia, or stop buying the oil from Russia, okay, then it can sit like that, but still gonna be a longer term buy opportunity. All right, so Gazprom. Okay, so thank you very much for coming into the weekly market outlook. Hope you have enjoyed that. Pound yen, I have already shown that pound yen just crashed last week. All right, and more to come over there for more downside. Yeah, we have seen a slightly bigger correction over there, which we were not expecting on the pound yen simply. Okay, we were expecting it to drop all the way up to 149 on this chart. Okay, we didn't expect that to happen. All right, it happened. We all know that. Why it happened? Okay, it happened because of the high interest rate in the UK. All right, but right now it's going into its original direction, the direction which is bearish over there. Okay, for this target, the target is the 149. All right, so asset fundamental hasn't changed. All right, still bearish. This is what we were expecting. Okay, breakout of that. We didn't get that. Correction just got so much bigger. All right, but at the end we were expecting from the price to drop again from these areas. Okay, or that top, the previous top. All right, or this correction which was appearing over there, or price to hold this previous top there and then break out. So we got that drop. Okay, so still got a plenty of room on this chart, plenty of run. All right, so simple. If I'm gonna pull out my moving averages, you are expecting price to stay below those moving averages next week, specifically, you know, as long as these crises are there, geopolitical crises are there. Okay, price to break down. So next week move, you are looking this price to break down, that move. All right, so thank you. We'll see you back again in another weekly market outlook. Until then, bye. Have a great weekend and stay safe. God bless on you, and hope these crises gonna pass on. We're not gonna have nuclear war. All right. Thank you. We'll look at that next week, Adam. China 15 next week. Sorry, we ran out of time. So next week.